This is Justin AMZN for Wednesday, May 1st, 2019. Yesterday we had inverted head and shoulders, a couple neckline areas we're looking at right around 1925, up here kind of around 1930, 1931. And pre-market we were running right into that area, came back with a really nice hammer, a little bit further into it, but really got a nice bounce from there. Pulled back a little bit, was setting up for a nice S curve, and then turned into an even star reversal that pulled back some more, actually took out this low ever so slightly. And then over here, I think we took out the high of this ever so slightly. It's like, okay, we're kind of range bound here until you get to this, little, just like you had here. Let me zoom in on this. I keep doing this. Okay, so you have this stair step for 15 minutes, really similar size candles here, and you do it again uh, right here. Really small candles, right under the 21, just like this, under the 21, just even smaller candles. And this was just looking like it was going to roll over. Uh, you had a consolidation here that should have continued bullish. I mean, you had the S curve here. Even if you had kind of a secondary S curve like this, okay, get going bullish. It's got to break bullish. You get a candle that it breaks bearish. Okay, it's holding that low. Give it a little bit of room. It's like, okay, this is setting up that it has to go. It has to start to rally, just like this. Turn it into Morningstar reversal like this one, and it doesn't do it. Breaks down. You get another move to the downside. Takes out some of the lows. We were holding these lows, some really strong candles, bullish, high volume, bullish engulfing, and this candle took those out. What's crazy though is we didn't just continue to roll down into the low of the day or into 1925. We just went sideways, and a lot of this was in the lunchtime hour ahead of I think a Fed announcement, and that's what made things start to move here. Rallied, came almost into, I mean, really did come right into this point where we should have broken out, and instead we broke down. Retesting that, not just with one inverted hammer, but a second very small one here into the same range, almost back up to that price, turning this into a nice double top that has a neckline here that completely breaks down. And now you've got a bigger move than you had here, kind of confirmation of, okay, we're taking out some lows. This is opening the door to at least get down to 1925. As you can see, obviously we got, down to 1912, 1910 almost. So, double top up here, nice hammer, really nice hammer, starts to move up. This looks like a double bottom. Maybe we're going to hold, not the low of the open, but, that range. But then you get a couple more candles in here, you get another hammer here, much smaller, into the range of this one. Okay, that should hold. Every time here, it's like, okay, that's breaking down, it's breaking down, it's breaking down. Okay, it's just, all right, this is bearish. Where's the best place to go bearish? Double top up here, inverted hammer here. Taking out these three candles, going bearish here, take a little bit of profit, 1925, but it just sailed right on through that. And so, the edge was definitely bearish for the majority of the day. At the open, though, it was a nice bullish day. You could have gotten into something like getting in a little bit more of $100 risk, doing like 650 by 5 to get around this candle. You could have done, I guess, 650 by 550, but you wouldn't have gone below that low. So that would have been a little bit tight. This is the 1950 call. That I don't really think you wanted to go too much further out than that. Maybe a little bit. This was that S curve here. Nice range on this. It was $6 range on that candle. So here you could have done 750 by 650. That only moved up an R, only moved up to 850. And then, chopped around and would have taken out your stop down here just to rally again. And so you could have possibly gotten out for a profit had you held through a little more than an R retracement. The low here was 642. And with the spreadiness of this, probably would have been stopped out with some slippage or something, possibly. But if you think about it, you were in at 750 and stopped out, say you were stopped out at 642. It's only a little bit more than $100 just to see it rally back up, and you could have exited for half an hour gain. It's just the choppiness of what's going on in here. And so all day today, on some of these options a little bit further out of the money, they were just running stops and taking some people out. You had a really nice level here, right around $5 that you could have been buying all day long. Just put it in buy order, and I mean, this would have been a little challenging, but it worked over here for 2R. This worked for 2R and then some, and then it took out the low and retested to that level. So if we're looking at, okay, 2 o'clock here, we rallied back up, we retested that level from below. What were we doing here at 150, 2 o'clock on the stock? That was right in here. So this was a retest on the option, very similar to the retest we got to the lows here. Not quite this low, but the low here that we put in earlier in the day. Really nice retest to that level, and this would have been a great place to go bearish, stop above probably that candle. So let's look at the puts there. This is the 1925 put that we had a really low volume all day long and had a really hard time getting to push lower. And so you could have gotten this set up like 6 by 5. Probably would have had to wait till later in the day to really get some signals for that. But that 2 o'clock, let's see the 2 o'clock time. Okay, we're way up here. So that's around 8. So I guess your last chance to get in like at 6 was somewhere in here between 1 and 1:30. So that would have been up here. That would have been that double top that, the puts lost some value, still held between 5 and 6. And then that just ran. That would have been the best place to get in, seeing this as a double top and a really nice stair step here that broke down. I'm sure a lot of people were looking for it to continue up. I mean, sure, look at the volume on this candle, a lot of volume. Some volume came in also on the inverted hammer, a little bit lower volume on these candles, and then it just reversed, came back down. Let's see, the other area I was thinking is right in here, so that's 215, 220. So 215, 220, that was around here. Hey, there you go, 10 by 9. Looks like that could have worked there too. So that would have been a double. 10 by 9 would have doubled, from your 10 up to 20. So that would have been a nice 10R. Had you gotten in down here like 6 by 5, that would have, getting out anywhere would have been a great gain. I don't know how many folks were actually holding this all the way through, but definitely had a significant sell-off. Looking like we're kind of curving back up a little bit. We'll see if we can actually hold this low down here or hold the 1900 level that we did a few days back during the day. We did wick down below it down to, let's see, I think it's 1898 right there. So we'll see if we can hold that value. What I'm also seeing is if you just kind of connect some points in here, I get this to snap. There you go. Pretty nice triangle. I'm not sure how it's going to snap. There you go. So if I just draw, this one's a little harder to draw because you've got a little more so relative lows. This one's much shallower here. If you take like maybe that wick instead, you can clean it up. It's close to that one, getting right into that one. And this, obviously it ran up to 1970, but really close to that one, right on these. So we're just only discounting this one. I don't like when it's not as symmetric, but it's working. Kind of shows, hey, there's something happening here. We're really wide, obviously, from earnings. Now we're tightening up a little bit. And even though this was a big sell-off, it wasn't that huge in the grand scheme of things. And, what's funny is today the open was actually a gap up. It was actually a bullish gap and go. At one point looking really nice and then, pulled back. But look at the choppiness we've got in this range that we had in this range here. It shouldn't be a surprise that we're running right into an area that had a lot of indecision. We had 1, 2, 3, 4, 5, 6 days in a row right in this range, right around 1921. here we are 1, 2, 3, 4, 5, 6, 7 days on the way back up, and on the way back up is true. It's like it looks like we're going to continue up, to me anyway. We got 3 bearish candles in a row here. If we can get another gap up and trap a lot of these bears, if we can get a gap up above the high at 1956.34, I mean, that'd be huge. Even the gap up today is really decent and moved nicely right out the gate, but it was just the rest of the day that got pulled back down. So, you can kind of see this smaller triangle here. We'll see if it's possible that we get down to the 21. If it is going to pull back some more, we haven't touched the 21 since we crossed it way back 2 months ago on March 11th. So we'll see what we can do from here. I don't know that we're going to be able to hit this all-time high by the 7th. I think the 7th is next Tuesday. That's a lot less likely, unless somehow we have a massive, bullish candle, like, one of these kind of thing, or this one, that kind of thing. But I mean, that kind of candle can come in right after a bullish gap, clearing some bears and stuff. So totally possible to do that up here. But a pullback would be fine as well. Would actually help more people kind of reload. But the other thing we could do, like I drew in here, is we go sideways for another day or two, and we tighten up on this range, and we just chop around right at 1925. I mean, 1925 is a really nice level. It's possible that we'll end the week right on it if this plays out. Actually, I'll leave that on. We'll see how well we get in tomorrow. I don't know how tomorrow's going to fill into this. Usually it's only like this much of after hours, or excuse me, this much of after hours. So that's about it for after hours. So, and then pre-market probably be this. So my guess is tomorrow's trading should be around this range of time, and likely, if it's going to stay within the triangle, then we'll see it range bound. I'm trying to highlight range bound, from like here down to here. So staying above 1910, staying below 1940. We'll keep it an inside day candle pretty much from what we had today. So that's what I'm looking for. If we can just chop sideways a little bit longer, a lot of people are going to want to go directional, want to just load up bearish and ride this down. And I don't know if it's ready to do that, or some people who were in hoping it's going to continue up, maybe they'll be trapped too because they may have been stopped out already today. So we'll see if we can chop around a little bit more. Yeah. So we'll see what happens tomorrow. Hope you enjoyed this video. This is Just AMZN. Thanks.